Hi, everyone. I'm Rick Bensignor. Today is Tuesday, December 6th, and welcome to this week's In the Know Trader Show. On tap this week in our trader education portion, we're going to talk about drawing a trend line, essentially how to draw a trend line properly, and then how to evaluate its significance. This is important for anyone who uses charts. In our focus sector portion, we're going to look at an ETF today. In fact, we're going to look at 11 of them because with what's going on in the market, I thought it would make sense to look at all 11 SPDR macro ETFs. In other words, each one of the sectors that make up the S&P 500. So you're talking about industrials, technology, energy, communication services, etc. There are 11 macro SPDR sectors, and in their proper weighting, they all compile and give you the return of the S&P. So let's take a look at them today. I've got some updates for you. So we've got 3 products that we have at our In the Know Trader website that are available for anybody to sign up for. Our weekly ETF Tactical Trader Report usually comes out on Thursday evenings. It gives you a very good picture of everything going on in the macro world, meaning that we touch upon what's going on in bond market, the dollar, commodities, and a deep dive into the S&P. I then give you a new trade idea each week, and also update all trades that we have on until they get closed out. So each week you'll get updated charts, possibilities of moving targets or partial profits, etc. Those all get updated each week until we finally close out the position. That's the first product we have. Second is the 7-11 monthly SPDR sector ETF report. The goal of that report is to outperform the S&P 500 by being in no more than 7 of the 11 SPDR macro ETFs, like XLI, same thing we'll be talking about today. And if you scoot down a little bit on the same slide, you'll see that through November 30th, we are outperforming the S&P this year by 5.46%. And we've outperformed in 10 of 11 months simply by being able to figure out which sectors to be in and which 4 to avoid each month. And if you're outperforming the S&P by roughly 5.5% while being invested across the S&P, just not completely across the S&P, but you are 100% invested all year long, it's just a matter of which sectors, that is a huge win. And despite the fact that, yes, we would be down this year, we are down about 5.5% less than you would be down if you're in SPDRs. So for all of you who are individual investors and also financial advisors who put money into SPDRs, I highly recommend you try a trial of the 7-11 report based on not only results this year, but historic results since we started this newsletter in August of 2020, which is 28 months ago. We have outperformed the S&P by 11.64% over those 28 months. Again, if you know anything about the money management industry, you would know that that is a huge victory relative to being in the passive index itself. That puts us at the top of all people who tried to beat the S&P. So this is not about being a hedge fund that goes long and short. This is simply about being in the right sectors of the market at the right time. To subscribe to this In the Know Trader YouTube channel that you are likely watching this on, go and sign up. Go to youtube.com/InTheKnowTrader. Hit the subscribe button this way. In fact, there's a little bell too that you can click on also that will alert you anytime I put out a new video like this. And of course, follow me on Twitter. The handle is In the Know Trader. The third product that I have is individual coaching services. So many of you hire me on an hourly basis to help you become a better trader. Financial advisors hire me to help them run their practice better, to understand their client needs better, to be able to incorporate behavioral finance theory into the actual selling process in order to maximize your client retention. And for those of you who are financial advisors, the worst thing that happens to you is when a client pulls their money and goes elsewhere. So we will, that type coaching is available to all to sign up through the inthenowtrader.com website. Okay, let's talk about the idea of drawing a trend line. Sounds very simple, and how to evaluate its significance. So what I'm going to do now is let's pop up. Here's a chart. This is a weekly bar chart of the S&P 500, and I've got it centered here on the late sell-off in 2018. So what I want to do is kind of draw trend lines the way I would since then, and talk about how you draw a trend line, and then how to evaluate how significant any trend line is. So first off, in order to draw a proper trend line, you need to be able to pick your first point that you're going to draw from a level. Let's talk about drawing an uptrend line. You need to draw it from and start from a bar. And here you can, if you see my cursor here on the bottom, what I'm going to look for is not only an obvious high or low. In this case, we're talking about an uptrend, so a low. But in order to properly identify the starting point, you need to have a price bar that on either side of the price bar, the low before and the low past that price bar that you're focusing on has to have higher lows than the low that you're picking. In other words, it needs to be a maximum point to a move at that time. So if I look at this low in December of 2018, where my cursor is now on, I look past it one bar, the low of the next bar is above the low of the bar I'm looking to start from. The low from the preceding bar is also above the low. That leaves this as an extreme point. So I start here. Then I look at, well, where is the next place I can draw a low? And here, in fact, if I were to slide this over, so at the time, let's say here, if we look on the right-hand part of the chart, so here we have the low in December. The next week's low is above, that's fine. So I know I can now identify this point because it's got higher lows on either side. And I start looking at where I can draw a trend line in this weekly time frame. A daily chart's going to be different. But in this weekly time frame, I look at this big move up. And if you actually understand the proper way to draw a trend line, there's no trend line you can yet draw because every subsequent low is higher and higher. So I don't have another point that's similar to this point that has a bar before and the bar after it with higher lows. So because each one of these has higher lows, I can't yet identify where I can pick a point. And look, we keep going. And now finally, we have the possibility, if the next weekly bar has a higher low than this bar, then I have a place I could draw an uptrend from. And let's see. Yes, it does. So I can take this line, that point rather, and connect it to this low here. Do you understand how I was able to do that? I had to wait for one of these lows to pick. You might have picked one in here, but it's not a proper trend line in the sense that you really want to identify finding bars in order to draw uptrend lines that have higher lows on either side of the bars that you want to connect to, the points that you want to connect to each other. So this now continues higher, pretty sharply sloped line. And then here, in looks like April of 2019, we have a close beneath it. So we have a possible breaking of that trend line. Now, how significant is this trend line? And what I'll say is, there's only 2 points on it, the one that you started the line from and the one that you ended the line on, which makes it you able to draw the trend line, but because it only has 2 points on it, it's not that significant a trend line. Now, what do I see here? I see a bar that breaks down and at least right now has a lower high than the prior week. If the next week, again, has a higher low, then I could draw another trend line going back from the low to this low. Let's take a look. Nope. These keep selling off. So there is no ability yet to draw a second uptrend line until looks like here. Now I have a point that I can again go from this low and then say, now I have a second trend line off of that December 2018 bottom. And now look what happens here. 2 weeks in a row, we penetrate that uptrend line, but don't close beneath it until this big bar down. So now this trend line has broken. And I can say it has 3 points on it. The one that we started from, the one that we drew it to, and then 2 bounces on it until we finally break. So that was a little bit more of a significant breakdown, except that what happens the week after it breaks? It comes right back to the trend line. Still tough to tell, but the week later it's right back above. So you can either look at this as a false breakdown, one that got some people out that all of a sudden, or not all of a sudden, very quickly turned around and went higher. So this washed out some weak-handed longs, only to see the market turn back up. But what did it allow me to do? It also allowed me to, again, draw another trend line. And now I have to look at which low is the lowest low, and it was actually this one here. So I now draw another trend line, which again gets played with, but ultimately moves higher. So in fact, if we look at here, I'll turn, let me change colors on this one so we can kind of call it out from the other one. So this orange colored trend line now has the point I started it from, the point I connected it to, multiple weeks in a row, kind of bounced on there, pulls back, holds against it. So now we have 1, we'll call this whole cluster 2, 3 points on it, 4 points on it over here until we gap beneath and go through. And this happens to be the COVID decline. So this one was even the most significant of all of the prior lines because it had 4 touches to it before it broke. So one of the things that we also see is that the more times you hit a trend line, the more significant it becomes. And then once it breaks, you have a better chance that it's truly a breakdown. Now, let's move forward and take a look at the decline that we saw in the COVID sell-off. I'm going to stretch this out. And let's take a look at, can we draw a downtrend line from what at the time was the all-time high heading lower? Well, look, each sell-off, each high now is lower than the prior week's high. So I can't identify a point because now what I want to do is find a bar whose high has lower highs on either side of it. So in that quick sell-off, looking again at the weekly chart, you'd be able to do this on a daily chart, but on a weekly chart, there is no downtrend line I can actually draw. So even though we bottom here in March, and this high had a higher high than this high, so a possible point to connect. The problem is that the week after also had a higher high than the week we thought we were going to draw it to. Therefore, I still can't draw the line. Then the following week makes a higher high. I still can't draw this line because it's not surrounded on either side by lower highs. Finally, this week here, you'll notice the week after has a lower high than this week, and this has a lower high than this week. So I can draw a line here, which is already broken by the time I draw it. So it's probably not significant. at least as a real significant downtrend line. This keeps moving higher. Now I start looking for being able to pick uptrends from the low. So I know I have this low, and I have to wait until this low here, because the one I'm now drawing it to, again, let me change colors on this, and here, let's just take this one away. I can now draw this uptrend line because this bar's low is surrounded on either side of it with higher lows, leaving this as kind of a spike bottom. Therefore, now I have a place I can draw a trend line from. And it breaks beneath here, goes sideways for a month, but starts moving higher again. So is this well, we can say this possibly even bounced 3 times, because we can say this is close enough to the uptrend line that this kind of had 3 points on it until it broke. So again, more times, better than just drawing trend line with 2 points. Now let's get into what we see post COVID bottom. So we had the first trend line from the COVID low that we drew, and it broke. I could draw another, so I'm going to actually just take it away so it's not in our way. And what I'm going to do now is look for, when's the next time I have a price bar whose lows on either side of it are higher? Well, this one here. So at the time, look, we don't know anything more than's going on at the time. So what I could do was draw this line like that, because I connected this bar's low to this bar's low. And that trend line fairly quickly gets broken. Now I'm going to condense some of this so that we can see more going forward. And what I've done here is drawn, and let me get rid of these old ones, because for the purposes of this, I'm not going to pay attention to my old trend lines. So these are some other ones I can draw. Now, of course, everybody's looking off of that March 2020 low, but there are other interim trend lines you can draw off of the same idea of how to pick a trend line. So I drew this one from this low to this low. So I kind of have this cluster in here. This just missed. So at least 2 points, almost conceptually 3, because of this attempt here. So this line may certainly be something important going forward. I also see that we start climbing up at a very quick pace, and I choose this low and connect it to, what did I use here? I don't remember, let's see, precisely, well, it's probably, well, it's not this. I think what I did here was simply just eyeball the fact that there is a fairly constant slope. So the intra-bar break beneath it didn't bother me to draw this line because we closed above it. So it's an intra-week move. But you kind of can spot, in fact, I could probably even draw it back a little farther. The problem is none of these lows in here, well, I guess I could start at 2 bars earlier, because this low right here is lower than this low and that low. So yeah, I could have started at 2 bars. It's going to be the same slope. I draw a trend line here, and I see that this line also captures the lows in here, making it even more significant. So we have 1 touch, let's call it 2, at least in here, 2, a whole cluster, 2 touches, 3 touches, 4th time, 5th time, or we can group them and say that's at least 4 times. You break a trend line that has 4 touches to it, like we did here in Jan 2022, and this happens to be the all-time high at this point, you have a much more significant break. Now, let's start drawing trend lines from what was the all-time high. So we have a sell-off, and when I look at these, look very close, and your eye would naturally go to use this as where you draw the trend line from. But if I look at where the high is on this bar, it's 45.95 and change, and this is 45.90. So I remember I need the higher high. So I'm going to actually take a trend line from that bar to this bar. So here, let's color it differently. Let's make this kind of a light blue. There we go. So that light blue trend line would be the current trend line at the time, which caught, we drew it from the high to the next high. We got some rejection, so let's call it 3 touches to it. And then you got the big move up in March. So that trend line broke. But it had at least 3 touches on it. So at the time, it meant something that you'd expect to mean something. And certainly the S&P went from 4,200 to as high as 4,600 and change before it topped. So 42, 46, that kind of close to a 10% rally. Let's look since. So once this sold off and went down and left this as a high with 2 highs on either side of it that were lower, we knew we could draw this line that I've drawn in pink. And we know that that actually is the current trend line from all-time highs, which we hit in August on the rally, and we again hit last week. 4 touches to it. Certainly a significant amount of time has passed. That's 11 months and 4 touches to it. That's a very significant trend line. And as I wrote, for those of you who are clients, you know that a downtrend line with 4 touches to it is more significant than an uptrend line with, we have this point to this low. We bounced so 3 times in a short period versus 4 times in a longer period. Generally, that both length and touches to a trend line will predominate and give you the more significant trend line. So in this case, now we're breaking down this week. The S&P is down 45 points or so as I'm recording this late Tuesday morning, and we have broken this uptrend line. I'd say the fact that we held 4 times now against, well, we didn't hold 4 times, but we have 4 points on the trend line. So we've held that trend line twice since we drew it, is more significant a deflection of the rally, as is the point that we are now breaking this uptrend line. Now, this is significant too, because it had 3 touches on it. So we've broken an uptrend line that has 3 touches to it. And unless, now today's only Tuesday, if we turn around and close up here on Friday, it's a different story. But as of now, this would appear to be a valid break of the uptrend line off of this year's lows that happened to coincide also with a rejection of the rally at the downtrend line. So I have to look at this as a continuation of the down move until and if this trend line breaks. So just hopefully this gives you a better clue as to how to draw trend lines and then to evaluate the significance. If I just pick 2 points and draw a trend line, and that's the only, and then the next time the market breaks through the trend line, yes, it broke a trend line, but it only had the 2 points to it that you used in order to create it in the first place. In other words, even here, if this August high didn't stop here, but kept going, this point, this trend line only had 2 points on it, the 2 points needed to draw it. But it didn't, and it rejected. So now we have 3 points on the trend line, and now I have 4 points on the trend line spread out over, again, 11 months. It's pretty significant. So I still look at this as a downward trending market, still a down, an overall downtrend. And if you look at the definition of a downtrend, it's lower highs and lower lows, or better said, lower lows and lower highs. So we sell off, we rally. This high is less than this high. We then sell off again. These lows are less than the prior lows. We then rally. This high is less than the prior high. We sell off, we make new lows. So we have a low, new low. So still lower lows, lower highs. And here we are again, potentially making a lower high. It's a perfect downtrend. Now, if we break above this pink line, it just means the downtrend line has been broken. It doesn't necessarily mean the downtrend is over until when? Well, you'd have to rally enough to take out the August high. Because even if you broke above this downtrend line and we, let's say, peaked at 4,200 and then sold off, that peak at 4,200 is less than the high at 43 and a quarter. And then you would expect at least or potentially a test of the lows, if not breaking the lows. You'd have to put in a major low above the October low and then take out the interim high in between in order to say that the downtrend is no longer in effect. So what I realize is we've taken up the bulk of today's time in just explaining this. So what I will do is next week, I will go through the 11 spider ETFs to go and see what they're saying. But I thought this was important enough, and I don't want to try to rush through those 11 ETFs just to stay kind of in a time constraint, because I generally want to keep this in the range of a half hour, and we're already at about 27 minutes, so I don't want to rush through the rest of this. So hopefully you learned something this week and take away from this some new information that you didn't know, or just some clarification on the best way to draw trend lines. So that's it for this week. I'll be back next week. Hope you enjoyed this. I'm Rick Bensignor, and this has been In the Know Trader.